With more than 6,000 small and micro-cap companies listed, if you're looking for the next apple at the earliest stage, then Channelchek truly is the orchard. The listed companies support Channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA-licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for Channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by Channelchek and Noble Capital Markets. Noble is an SEC-registered FINRA-licensed broker-dealer and the source of the equity research available on Channelchek. Today's interview features Allegiant Gold, OTCQX ticker symbol AUXXF, TSX ticker symbol AUAU. Noble Senior Research Analyst Mark Reichman interviews Allegiant Gold CEO Peter Gianulis. Visit channelchek.com or click the link in the description for Mark's research on Allegiant, as well as news and advanced market data. And now, here's Mark and Peter.
Peter, welcome.
Hi, Mark. How are you?
Good, good. See, I wanted to first start off by having you talk a little bit about your background and your involvement with Allegiant.
Well, I joined the board of Allegiant, or the predecessor to Allegiant, called Columbus Gold, back in 2009. And then I took over the helm as CEO in September 2019. So I have been involved with the company for over almost 12 years now, and have been involved in the acquisition and drilling of most of our projects. So I'm very well aware of what's been going on. I know the history, I know the shareholder base as well, and have become also a very large shareholder of myself the past few years.
What about the other members of your team, and how does their experience enhance the company's probability of success?
Well, we've had a long-standing team. I mean, Andy Wallace has been with us for 15 to 20 years. Andy is a legend in the Nevada exploration industry, having found and developed and put into production over 5 major gold mines in Nevada. Norm Pitcher joined our board since the inception of Allegiant. Norm was the former president of El Dorado. Norm has taken an active role on the technical side at Allegiant, and I work with Norm very closely. Our other board members, Gordon Bogdan, was just recently joining us on the board in this upcoming AGM in the next week. Gord brings a world of knowledge, not only on the banking side, but on the geophysics side. He's been a great addition to us. And then Sean Nichols, who's probably one of the most experienced junior exploration, junior mining investors that I've come across over the past 20, 25 years, has been on the board. He's been just really amazing to have on the board. I work with him and speak to him on a daily basis. How does that help us? How does that help us in success? Well, I think continuity, the experience helps in this industry. The junior exploration industry, contrary to what most investors believe, is a long-term investment. This is something, it takes a while to find a deposit, make sure that's economical, and then develop that deposit into production. You know, they could be 10 to 20 years before all of that occurs. And we take that understanding and that responsibility very serious. We're not trying to be this the flavor of the day. We're very methodical and disciplined in how we operate, and all of our board members buy into that philosophy.
Well, let's first talk about Eastside, your flagship project. Please tell us a little about Eastside and why it is unique and your near-term goals for the project.
Well, Eastside is our flagship project. It goes more in line with how we run Allegiant as a whole. Our philosophy has always been focus on 1 or 2 things and do them really, really well. And although we have 10 projects, all of them are pretty exciting and pretty amazing. We can only focus on 1 as a junior exploration company. We can only focus and develop and advance 1 at a time. Eastside was an easy selection for us because it's something we've owned for about 13, 14 years. We made the first discovery 4 or 5 years ago in 2016. We built up the gold resource to approximately 1 million gold ounces. We do believe that there are multiple million ounces at Eastside, and our job and our goal is to prove that up over the next few years. and we'll do it in a methodical, disciplined, and a manner that will protect the shareholders from excessive dilution. So from our perspective, doing these things and getting, advancing Eastside to that multi-million ounce is really our goal, and we've started doing that late last year with the drilling on the south side of Eastside called the Castle area, and we've initiated our drilling program a few weeks ago on the original pit area to expand resources. And we have an ongoing program to expand the operating permit to explore for other areas within Eastside. So Eastside is really a wonderful project. It's not a retread. It's a new discovery made by us 4 or 5 years ago. We consider it to be one of the better projects out there in all of Nevada, and probably Nevada being the best jurisdiction in the world.
Well, you mentioned that in 2020, the company commenced the 15,000 meter drilling program. Would you discuss what has been accomplished thus far and the sequence of remaining drilling in 2021?
Yeah, we drilled approximately 6,000 meters on the south part of Eastside, which is called the Castle area, which incorporates really 4 zones: the Castle zone, the Black Rock, Berg, and Boss. We focused most of our drilling around the Boss area. That was done to achieve 3 main goals. That was to verify some of the historical drilling and resources that we had out there. The second was to add additional ounces, or the possibility of adding additional ounces. And the third goal of that program was to prove up our theory of a very low strip ratio operation. And we finished drilling at the end of last year. We're putting together, we've put everything into our leapfrog program, and also our mapping, and just in conjunction with the original pit zone drilling. So we'll be announcing things in the next few weeks, and that will be in conjunction with the drilling of the original pit zone, and ultimately to an updated resource estimate. The original pit zone, which we're drilling right now on the western flank, is expected to be a 4,500 to 5,000 meter program. So 6,000 plus around 4,500 to 5,000 gets us to 11,000 meters. And then we have an additional 5,000 meters that we would drill upon the receipt of the expanded permit area.
So the opportunity to continue developing the original pit zone by expanding the operating permit zone, when do you expect receipt of approval by the Bureau of Land Management, and how soon would drilling follow?
Yeah, so we've submitted our application last year. We've conducted all the studies and the additional studies that were required by the BLM. We believe that a expanded permit was forthcoming in the next, call it 2 to 4 months. It really is kind of out of our hand, but we have a lot of work to do in the meantime. So even if we received our permit, not necessarily sure we would be doing anything at that time. Since we're already drilling, we commenced drilling at the western flank of the north part of Eastside, which is the original pit zone. Assuming we get the permit in the next 2 to 4 months, I would expect that drilling to commence very soon thereafter. So within a month to 2 months, we would commence drilling and finishing up the 15,000 meters that we had announced last year.
So now, when do you expect to release an updated mineral resource estimate, and then following that, a scoping study, preliminary economic assessment?
Yeah, it's interesting. We've started the initial part of the updated resource estimate. I actually was on a call this morning, lasted a bit, to discuss the parameters and the incorporation of the Castle area into the global resource estimate. So I think we are moving forward on that. We're making a lot of progress. It's going to be a function. The date will be a function of the completion of the drilling at the western flank of the original pit zone. I think a good date would be, if I were forced to put something, sometime around early to mid-April would probably be the best time for a release of a resource estimate.
And then how about the PEA?
Well, the PEA or the scoping study, depending on which way we go, will be on the back of the resource estimate. So we've already engaged, one of our consultants at MDA to look at that, and we're just, doing that without having the updated technical report 43-101 doesn't make sense. So we're gonna progress this first with a 43-101 updated resource, and then the scoping study will follow right thereafter. And given that the scoping study may take a look at both zones, which are the south and the north, we kind of need to have the drilling to be completed and incorporated into the pit shell.
Well, and I know the goal of the drilling program, you're trying to define, just how big is this opportunity? Is it 2? Is it 5 million ounces? But what's your immediate goal in terms of internally, in terms of the resource?
Yeah, I mean, if we're just gonna, we used to discuss gold equivalent ounces. We've moved to just gold ounces. So our immediate goal is to prove up a resource of 1.5 to 2 million ounces of just gold at Eastside. That would be primarily mostly oxide, and from the metallurgical work we've done, we would probably ultimately move to do more metallurgical work. But the initial analysis that we've done in metallurgical work has been very, very positive. We believe that 1.5 to 2 million puts us at almost a rare company for a junior exploration in Nevada. Once again, we will continue to keep on advancing the project and get it to the most economical point that we think we can achieve. And we're going to try to do that with very little dilution if possible.
Is it a little early to be thinking about 2022 in terms of the drilling program? No.
We've already started our plans for 2022, and that will be focused primarily on the expanded permit area. Although it is preliminary to talk about how much we would be drilling, so it's going to be a function of market conditions as well. I don't think it's inconceivable that we would drill 10,000 meters around those areas, and possibly more.
Well, now let us talk about the company's option portfolio. First, how do you view the portfolio as a vehicle for creating value for shareholders, and how many properties are in the portfolio and under option?
So the first part of the question, it is part of our central strategy and philosophy that a farm out or an option out of one of our projects must comply with 3 things. One is that we have to be compensated. There has been money spent on these projects over the last 15 years, and we have significant amounts of data. So first, we would like to be compensated, whether that's shares, depending on the company, or cash. Second is we want a work program. We want those projects to be worked on. If someone's just going to hold it and flip it or promote it, that's not interesting to us. And third, we want to retain an equity interest or an interest in those projects. So the first part of the question adds a lot of value because the cash and the shares that we get paid have been a very important driver for us reducing the amount of dilution that our shareholders have taken over the years. I mean, I'd be hard pressed to look at any junior exploration company that's been able to maintain a very low share count on a relative basis versus us. And a part of the reason is that farm out model. Today we have 4 projects that are farmed out. We have Mogollon farmed out to Suma Silver, a wonderful company. They're going to be extremely aggressive this year in drilling Mogollon, which is on the border between New Mexico and Arizona, a gold, silver, primarily silver target. And Suma Silver is very well funded to be able to take on that project. And then we've our longstanding partner, New Placer Dome, has been advancing the Bolo project this year. They have to drill approximately 1.2 million or spend approximately $1.2 million in the advancement of Bolo. Bolo is a discovery we made back in 2016, farmed it out to New Placer Dome around 2018, consisting of cash and share payments as well as an aggressive work program, and we maintain about 50% of that project. The third project we have farmed out is it's called Clanton Hills, farmed out to Supernova. That project, they've been drilling. The results in the initial results were not as expected. But it is a wildcat type of exploration project, and was one of the projects we had least interesting to us because it was base metals and not in Nevada. So those 3 projects we farmed out. We are talking with a few other groups about farming out other projects, but it's going to be within the context of the market as a whole. If the market remains soft, then we really don't have that much of an interest to farm out things.
So now it sounds like the properties that are under option are progressing very well. So what are the company's funding needs for 2021?
So when we did our budget, we felt comfortable with our budget and our funding needs. I don't believe that we would need to raise any money this year, assuming that our option payments and our farm out payments come in. So I think we feel fairly comfortable where we stand today. I mean, there's other variables that, I can't list all the variables, but the variables will how do the companies that we own shares in perform? It's another function. If they do average, we're fine. If they go down, then there's less money that we had budgeted. But we feel fairly comfortable on our funding needs and don't believe that we need to hit the market for any private placement.
Yeah, during the panel discussion at NobleCon 17, you made some interesting observations about merger and acquisition activity, notably the rationale for junior exploration companies to merge to reduce G&A expenses relative to company size and to build scale. Can you comment on the current M&A environment?
Well, I think that this recent pullback in the junior exploration market and in gold has really accelerated the conversations that many companies have been having. You saw a deal done, I believe, yesterday on Viva Gold, another exploration company very close to us at Eastside, maybe 30 miles away from us, merging with Golden Predator. I think there's other companies that are being merged within the Golden Triangle in British Columbia. I think there's a lot of activity within companies that are looking for better jurisdictions. It's something I made a comment maybe 3 years ago, 2 years ago, and then with the pandemic, it's never been more true that jurisdiction is maybe the most important thing today, and especially jurisdictions where are in countries or areas that are don't have a strong rule of law or a political or a legal framework to protect your assets, considering that precious metals mining is a long-term industry. I see M&A activity really accelerating now, and I think there's a few things that have to make sense for companies. One is that the combined company, and obviously this is without saying, has to be a stronger company. You can't merge two weak companies to come out with a stronger company. There has to be a rationale, whether that's cutting G&A, rationalizing projects, or simply just growing. Two projects in the same region don't need two exploration teams, two technical teams, two geophysics teams. And you do have some scalability on that. That same exploration team can drive 100 miles in Nevada and cover the same areas, right? And cover the same project. So there is a lot of rationale for that. And then I'll add to the fact that a larger market cap company makes sense. A lot of institutional investors, are looking for those 2, 3, 4, 500 million market cap companies rather than, $30 million market cap companies, right? So I think that there are numerous reasons why companies want to merge, and I think that you'll see, in my opinion, I think you're going to see a lot more mergers happening in the next 6 to 12 months.
Well, to wrap up, what differentiates Allegiant Gold from other gold exploration companies, and why is now a good time to invest?
Well, I've been fairly consistent on what really separates us. I think there's five main things that separate us as a sum rather than one single issue. I think the first thing is our resource. When you invest in Allegiant, you're not investing in a company trying to find gold. We already have it. We found 1 million ounces of gold and inferred resources in a wonderful jurisdiction, which would be number 2. So jurisdiction. So one is we're not a company trying to find gold. We're trying to expand the resource we already have. The second is jurisdiction. Nevada is ranked number 1, 2, or 3 over the last, as far as I can remember, in terms of ranking by jurisdiction by Fraser Institute. I can't overemphasize enough the importance of jurisdiction going forward, especially in the world we live in with economic malaise, governments reaching for sources of new revenues, and mining companies, particularly owned by foreign entities, are an easy target on their back to whether that's make their life difficult on a permitting process, licensing, or royalties. The third is technical team. We do have arguably probably the most experienced technical team in Nevada, and I'd be hard pressed to find any team that has as much success as our team's had over the last 50 years with Andy Wallace. And so I think that separates us. The fourth element separates us, making us very different, is our model of a major project, flagship project, and then all the other projects are being farmed out to generate cash flow. That's important for us as it allows us to maintain a very low share count, or a low share count, by reducing the amount of dilution that our shareholders have to take. And then the fifth aspect is insider buying. Once again, I don't know many companies that have spent, I don't know many companies that have invested as much in the stock of their own companies than Allegiant's insiders and management. We have bought somewhere around 16 to 17% of the shares outstanding in the open market since September 2019, and we're constant buyers at these levels. We've been constant buyers of the shares in the open market. So I think those five things in unison really make us different. I don't know any other junior exploration company that actually meets those five criteria.
Well, Peter, thank you so much for joining us today.
Thank you, Mark. I appreciate it. Have a great rest of the week.
Mark, this was an interesting interview. You asked about the Bureau of Land Management and approval to expand the operating area. How likely is that to occur?
Well, first, the Bureau of Land Management is part of the U.S. Department of the Interior and is responsible for administering federal lands. I believe it's highly likely that Allegiant will receive approval to extend the operating area to continue developing what they call the original pit zone. However, in our interview, Peter mentioned within 2 to 4 months, which is longer than my previous expectation. That said, regulatory processes generally take a little longer than one might expect, and with the significant increase in exploration activity and the impact of COVID on BLM work processes, I think it's wise to build in a little conservatism. Nevada leads the nation with the largest mining program within the BLM, with more than 180,000 active mining claims, or 49% of the BLM total. So additionally, I think there's not really an immediate need for the permit, since it is further down on the list in terms of the company's drilling program.
And Mark, I thought that the discussion regarding M&A was interesting. You know, Peter mentioned that Golden Predators announced a merger with Viva Gold. Are there parallels here?
Well, you know, during NobleCon 17, Peter made some interesting observations about merger and acquisition activity, notably the rationale for junior exploration companies to merge to reduce G&A expenses relative to company size and to build scale. In Allegiant's case, I think they would be open to such a transaction, so long as it is gold focused and within the confines of Nevada and or near their current flagship project. In the case of Golden Predator and Viva, where Golden Predator's project is in the Yukon and Viva's is in Nevada, I think it was really to gain the diversification benefits of a multi-asset company in different mining jurisdictions, along with the efficiencies gained from putting them under one roof and increasing the market cap to be more relevant to institutional investors. Another big factor, I think, is that Golden Predator was looking for an experienced operating executive to advance Brewery Creek into the development stage. And James Hesketh, the CEO of Viva, who will lead the combined company, he's acted in a consulting capacity on Brewery Creek and is pretty close to Bill and Janet Lee Sheriff, Golden Predator's chairman and current CEO, respectively.
And Mark, what do you see as the near-term catalyst for the stock at this point?
Well, I think the near-term catalysts include one, drill results from the Castle Zone, which is in the southern portion of the project area. Secondly, drill results from the original pit zone, which is currently underway. Third, receipt of the BLM approval, which we discussed earlier. And fourth, an updated mineral resource estimate, which we expect as early as April. And then perhaps lastly, a scoping study and preliminary economic assessment in kind of the August, September timeframe. Now, you know, we discussed M&A activity, and so I would not rule out something happening on that front, you know, in the interim.
Gotcha. And then what do you think are the key differentiators between Allegiant and other exploration companies that are out there?
Well, beyond what we highlighted in the you know, is in terms of kind of the takeaways, the management team is superb, and the company's chief geologist, Andy Wallace, he's an incredible asset since he knows Nevada very well, and is responsible for many big discoveries there. Peter Gianulis, the CEO, he brings a unique mix of capital markets, financial, and mining experience to bear. And I've been impressed in that he's very disciplined in how he spends money and is intent on keeping the share count tight and avoiding unnecessary dilution. So a big differentiator is the company's optional portfolio, which allows them to focus on advancing Eastside while retaining royalty interests in non-core properties that they option to others for development. And therefore, that portfolio generates cash flow and then helps subsidize Allegiant's expenses and also limits the amount of equity they might otherwise need to issue.
Well, it's a fascinating interview. I greatly appreciate you bringing the management to us, Mark. Thank you.
Thank you, Mike.
Thank you for joining us for this C-Suite interview presentation brought to you by Channelchek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.